Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Chris Englebert, founding partner and chief investment officer of Englebert Investment Advisors, as well as Jamie Englebert, president and chief compliance officer of Englebert Advisors, to discuss managing an advisory business as well as a life partnership. It is great to see you both. Thanks so much for joining us on Trade Talks. And Chris, I'm going to start with you first. One of the major causes of marital stress is how couples manage their money. Sometimes money has been a control issue within a marriage. The key is how to avoid this situation. So tell us about that. What are some best practices here?
Yeah, Jill, a lot of people talk about, hey, you got to communicate about money. Well, what you really need to do, first of all, is identify in a couple the relationship with money. So Jamie will tell you that I'm the spender and she's the saver. And, once you identify how each person interacts as a couple, it really starts the dialogue so you can talk about, okay, I'm always like, hey, maybe we should do this or maybe we should do that. And Jamie, pulls me back or reins me in. And many times couples don't even have this discussion till after they're married. I mean, when you're single, all you're doing is worrying about yourself. You're not really worrying about, what you're going to do as far as how much somebody else is going to spend. So, again, you got to have this dialogue, hopefully before you get married. And then after you get married, you obviously have to keep talking.
And Jamie, what about the different generations? How do they approach money?
Yeah, so like Chris was saying about, just different ages of people are that they're married. What we found is when it comes to the baby boomer generation, those folks typically, the man was out there in the workforce. Perhaps he was the one paying the bills, maybe not. And usually the wife was at home taking care of the family. So they definitely, that generation would have joint accounts. The money was always all in one pot. It was everything, easy peasy. Everybody just bundled everything together. But what we're seeing now is, maybe Gen Xers are a generation where, divorce comes into play and now you're dealing with blended families. So that generation, we find sometimes, people want to keep their money separately. And then even the younger that you go, millennials, we're seeing that they typically like to keep their money separate, which, it's just a way of life for them. They're more independent, I think, as per the baby boomers. So they're definitely more inclined to keep their money separate.
Well, Jamie, let's use you and Chris as an example. How do you guys manage your money as a couple?
So Chris and I have what we call the $500 rule. Anything that you want to purchase that's less than $500, have at it, get whatever you need, whatever you want. Once it's a more of a substantial purchase over $500, we definitely are having a conversation about it. What you need to consider when you're in a marriage is, a lot of times, if you own a home, you might have big expenditures, some home improvement project, or, you're planning for a vacation that everybody needs to take. Maybe you got college, coming and you got to pay for that. So we definitely will sit down, have a conversation about it. And, it's hard because, you're working. It's hard to, when you get home at the end of the day, you got your family to take care of. Sometimes it's hard to find time for that conversation. So sometimes we'll turn it into a date night. We'll have a date night, a dinner out where we'll talk about, hey, okay, here are the things we have coming up. We got to pay for the kids' school and, this home project or driveway, whatever the case may be. It's just real important, the conversation, to have so that you're on the same page and that you have a strategy to move forward together.
Chris, anything you want to add to Jamie's comments?
Yeah, I mean, it may sound real simple or old-fashioned to create a budget, but to me, that's key. There's a lot of apps nowadays you can download on your phone, where a couple can sit there and say, okay, here's what we're spending as far as what's going out of the household. But, what Jamie does really good is that we literally have an Excel spreadsheet that shows, hey, here's what the bills are coming in. Going out. Here's what money is that's coming in. Again, how much do we have left over? But the other point that I would like to make is that couples really also need to have a harmonious retirement strategy. Many times, husbands and wives have no idea how much each of one or the other is putting in their 401k. They don't even discuss it. And so it becomes a big surprise at the end of the year when they go to do their taxes. They're like, wow, man, we're really getting hammered on taxes. What are we doing? Well, honey, how much are you putting in your 401k? So you got to really have this harmonious retirement strategy. You got to talk to each other about it because, we've talked about this in previous videos. Saving money on taxes is very important. So a lot of couples talk about spending money and who's spending the money and what are you spending it on. But the other important side is also to talk about how are you saving your money, especially in retirement plans.
Well, Chris and Jamie, not only are you life partners, you are business partners. You own and operate an advisory business together. What's that like? Does it add another element to being life partners? You're 24/7, you guys are constantly thinking about and managing money.
Yeah, so how we handle it is there's a definite line in the sand. We keep work at work and our personal life at home, and we really try to not commingle them. But when it comes to, finances and financial planning for the business, we're a boutique registered investment advisory firm. So to us, every dollar counts. We keep a very tight budget. We know what the fixed costs are, and what we have left over, we're very thoughtful and mindful about how we want to apply those dollars and put money back into the business so we can grow. But when it comes to big projects, we'll definitely have discussions. But like I said, we stick to our budget when it comes to the business. And we don't let that overflow, definitely not into our personal life.
Yeah, I think that's a really key point that you make, especially since those lines could potentially be blurred at times, but it sounds like, Jamie, you're focused on the operational side of the business. And of course, Chris, you're thinking about the investment side. So there is that line and division of responsibilities.
Yeah, absolutely. Chris, I don't know if you want to comment on that one.
Yeah, and again, I compliment Jamie because she does a very, very good job. We literally have budget planning meetings for the business where we talk about, hey, here's what our revenue is, here's what it's projected to be, what are some of the things that are coming up? How much are we going to spend on marketing? How much are we going to spend on other things that we're trying to do? And again, it's that, this may sound an old phrase, but it's communication, talking about it. Sometimes I have crazy ideas and Jamie will come back and be like, hey, we can't really afford that right now. Maybe we need to revisit it later. But being part of the budgeting process also helps me because then I'll say, wait a minute, do we really want to spend money on that in our firm? Is that really the direction that we want to go? So again, communication is the key, the budget's the key, and having an open dialogue, especially in a professional sense.
All right. Well, Chris and Jamie, we do appreciate you pulling back the curtain in your personal and professional lives. And Chris, I want to wrap up here and talk about the markets here for a minute. S&P 500 and the rest of the indices certainly had a strong first half and finished to the first half of the year. What are your thoughts on the S&P?
Yeah, people came into this year way too bearish. We thought that they were way too bearish. Now I have to say, we think people are extremely bullish. A lot of the dominoes that everybody was worried about in the first couple of months of the year have kind of fallen. Lower inflation, the banks scared didn't really turn out to be that big a thing. So now we're at the upper end of our range. And, we are cautious at this point. Our risk indicators are elevated. That doesn't mean the market can't go higher, but we are, definitely cautious at this point because we've come into a much better situation than what anybody originally thought. And we still have some challenges ahead of us for the back half of the year.
What about the Nasdaq making history?
Yeah, Nasdaq, best first 6 months in the history of the Nasdaq, flying along. Now, people have to realize July 24th, the Nasdaq is going to be reconstituted because some of those big names have actually moved up in a higher percentage than they are supposed to be on the Nasdaq. Again, as bad as the Nasdaq was last year, is as good as it is this year. But again, we're cautious at this point. Some of our relative strength indicators are still overweighting growth stocks, and we think that still is a good place to be. But again, you got to be careful about going all in at this particular point in time because we've run so far so fast.
Let's talk about the Russell 2000 for a minute, Chris. I feel like every time we start to see small caps join the party, kind of flatlines after a minute, like it just hasn't followed through with participation. Do you think that could be different this time around?
Yeah, I actually think we're getting closer because now in the last 3 weeks, we've seen the small mid caps join the party. I really think that professional investors are looking around. They're looking at the elevated price earnings ratios of these large cap tech stocks, and they're looking and saying, hey, here's what's expensive, here's what's cheap, and small mid cap stocks are still historically extremely cheap. And so if you're taking some money off the table and reallocating, we think that benefits the small mid cap stocks, especially for the rest of the year.
And what are your thoughts around oil? We know OPEC Plus is continuing to cut here.
Yeah, I mean, we were very bearish on oil last year. Oil's kind of bottomed in the mid 70s area. I would not be surprised, obviously, if you look at this chart, you've seen it's broken an important downtrend line. Oil could easily get back into the mid 80s area. So right now we're saying that oil is probably done bottoming for the near future. And again, whether it's an economic play or a supply and demand play, what I'm really looking at is kind of a balance of what's out there. And oil really fell very far, very fast. I would not be surprised to see a bounce back in the mid 80s in the next couple of months.
And finally, let's wrap up with the 10-year.
Yeah, the 10-year, extreme inflation worries had the 10-year get up to 4%. We are viewing that anything over 4% on the 10-year is a point where you actually want to, what they call fancy word, lengthen duration or increase the duration or buy longer term bonds. Last week and the last couple of days, we've been buying longer term bonds. The cooler inflation numbers caused the 10-year treasury to turn right around and head back down. We think Jerome Powell, we think the Fed's going to raise a quarter point, come the end of this month. Now all bets kind of seem to be off as far as whether or not the Fed needs to keep raising rates. It looks more likely than not that they're on pause for probably the rest of the year, which might be good news for consumers.
All right, Chris, Jamie, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.